Hello, everybody. This is Toni Turner, and welcome to the Market Now on Friday, July 10th, just after the market's close. Well, it was down earlier today, but the S&P 500 rose this afternoon, bolstered by a couple of big tech names, with the index logging a weekly gain of about 1%. The NASDAQ had also finished the period higher with a gain of more than 1%. The Dow, on the other hand, has fallen a little bit this week, but less than 1%. So on that note, let's go on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. This is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, as you can see on this chart right here, that green candle, the SPY closed the week at $754.94, still below the all-time, not too far, but still below the all-time high on June 2nd at 760. Now, the SPY is currently sitting above the red line, the 20-day moving average, which is coming in at $743.81. We've got the green line, the 50-day moving average, coming in at 741 and change. And certainly the 200-day moving average, the black line, is down here at 694. So we know, if you look left on this chart, you can't see what I'm going to say right for the moment on this chart, but if you look left, we know that after climbing in a very strong uptrend from the April 2025 lows at 481, from those lows, it climbed all the way up to where we are in this chart right now, up to 697 here in January of this year. And then it started trading in a range because it had gone up so far. It started trading in a range here from 676 to 697. That was January, February. Then it fell on the news of the Iranian war, or the war with Iran, down to 629 here in March. Then rebounded all the way up here to the June 2nd highs we just talked about at 760. Now from there it dropped down here to 723, rallied up to 757, dropped to 726, then moved back up over the 50-day moving average and kind of stumbled around here to where we are now at $754 and change. Now, we can see here, if you look with me, the SPY is building a triangle. It has been. We can do that. We can do this. The 50-day is actually doing a pretty good job here of drawing a trend line, actually a little straighter than I just did. And then we have the other line, the top line, which would come over right about there. So it looks like, at the moment anyway, it looks like the SPY is making a valiant effort to break out of the triangle here to the upside. Of course, that's bullish. We'll have to see what happens. So we're back up here now to 754. So what do we do with this? Well, in the coming week, we look for support and resistance levels. We have resistance here right about where it is at 757, and of course up to 760 at the all-time highs here. So there's little resistance here. Potential support comes in at the 20-day moving average at 743 and change, 50-day at 741 and change, and we have the pivots here at 727 right there. This line that I drew, 723, 727. So we have this potential support here. Of course, this consolidation down here at 710 to 713, we could draw a line and say that is potential support as well. Then we have the prior highs here at 697, potential support, and that lines up, at the moment anyway, that lines up pretty well with the 200-day moving average at 694. Now, we talked last week, and I said that I really wanted the SPY to hold if it has to, I didn't know, I thought it might. I thought if it falls below the 50-day moving average, I really want it to hold here to be bullish. I want it to hold at 723. Well, it must have heard me because it's doing very well so far. Please do keep in mind that in the coming week, we start the second quarter earnings season, and earnings season can cause a more volatile market. Volatile is not a bad thing. It just means up and down. So it can cause more volatility in the market. So just keep that in mind when you're trading. Our next chart here is a daily chart of the Invesco QQQ, symbol QQQ. Of course, this is the ETF, which follows the NASDAQ 100, which is the top 100 non-financial stocks in the NASDAQ stock market, which of course includes all the large tech stocks that really make this market move. The Qs closed this week at $725.51. It is still below the new all-time high set on June 2nd at 748. Now the Qs right now, if you can see on this screen there today, it went from below the 20-day to back above the 20-day moving average. And that is coming in at, the 20 days coming in at 722. It is sitting atop the 50-day moving average, which is coming in at 715. That's the green line. And of course, above the 200-day moving average coming in at 638. Now, you can't see it on this screen, but from the Q's April 2025 low, last year's low, it was down at 402, and it rallied in a very strong uptrend up to its January. Now here it's going sideways, but just before that, earlier in well, I should say in the late part of 2025, it got all the way up here to move up to a January high here. It came January of 2026, came up here and moved up to a high. This is actually a high here. You can't tell, but it was much lower before. A January high here at 637. Now from there, in February, it dropped down under the 50-day and 200-day. I'm sorry, the 20-day and the 50-day moving averages. It dropped below that down to 594, tried to punch back through the 50-day, couldn't do it, and then fell on the news of the Iranian war here, down to the low here at 555. Then it rebounded like crazy and just made the most incredible uptrend here in April and May, again way up over the 20-day moving average, up to its all-time highs up here at 748. Then it fell down here to 693. Then it rallied to the June 15 high at 744, then fell down to the 50-day, struggled and struggled, up to 737 right here, and then dropped down and then popped. So it dropped and popped back up above the 50-day, and actually today it was below the 20-day, but it moved back up over it at the close. So back up to where we are now at 725. So we also have kind of we can draw trend lines here. We've got a triangle going on here as well. But we talked last week more so about how you can really see on the Qs chart, you can really see how the bulls and bears are duking it out here. The bears are opening high and closing down low on the day, then opening low on the day and closing on the high of the day. So the bulls and bears are duking it out here. They're really arguing. They're starting to be a little nicer the last 3 or 4 days. But with earnings season coming up, I'm not sure how long that's going to last. So we have resistance from where we are now. When the Qs start up, we do have resistance here at 737, 743, and the highs up here at 748. We have potential support at the 50-day moving average at 715. then down to 700, down to this pivot here, down to 700 and 703, down here, and over to this is the 693 level right here. Then we do have a consolidation around 660, and we have then the prior highs at 637, and it's right, which lines up with, I'm not drawing a very straight line, which lines up with the 200-day moving average coming in at 638. So as we said last week, and I said last week, I don't want the Qs to be bullish. I don't want them to break below 693, and that didn't happen. It's still above the moving averages in that level 793. So maybe if we get some strong earnings in this earnings season that's coming up, it can stay above that level. Anyway, that's what I'm hoping for. And no, hope is not a strategy. For our final chart today, we have a daily chart of the State Street Spider Retail ETF, the XRT. It does have 75 holdings in it. Top holdings are Groupon, Real, Bath and Body Works, Warby Parker, and the Upbound Group. Now, one would think that when you go into the retail ETF that you would see like Nike and Costco, but that is not the case. This is a very interesting ETF with some very interesting holdings in it. What I'm doing, so you can check that out, I'm looking here, just looking at this and the way it's set up, I'm looking for a breakout here. And so, right like that, and we're going to talk about it. I'm looking for a breakout here. Now, the XRT closed today at $88.11, sitting atop its 20-day moving average, which is coming in at 87.20, above the green line, the 50-day, which is coming in at 84.67. Looks like the 50-day is going to at least try to move up over the 200-day, which is coming in at 84.50. So it's just, they're right together here. Now, you can't see it on this screen, but I always look at longer-term charts before when I see something I like. So I do know, and I can tell you that the XRT made an all-time high in July of 2021 at 103. Okay, so it made an all-time high at 103. Then it headed lower from there. So when we look at this chart here, we can see that it made a recent high in January of this year at 91. Then it rolled down there from here, from this 91, it moved down. And actually here, if you want, we can say we see a Head and Shoulders here. We can say that. And it played out. It broke the shoulder line here, and then the XRT moved all the way down to March and April lows on news of the Iran war was one thing. Down here, down to 78 in March and April. Then it rallied back up here real strongly, up here to 89. Then it rolled over again and retested the 78 low again. This ETF likes to go back to where it's been. Then it rebounded again and up to 88. So we came all the way back up here again, up to 88, and is now trading in a range right here from 84 to 89, I'm going to say. This 89 is a very important level. It's a key level here for the XRT. You see it goes all the way back through this chart. For a breakout in the coming week, and again, Q2 second quarter earnings season is starting, so that could add to things. But if the XRT in the coming week can break above 89, if it can break above 89, I will buy a small position in my trading portfolio with my initial stop below the 150-day moving averages. I'm going to put it down here at 84.50. You can make it a little lower or anywhere you want, but that's where I'm going to put mine at 84.50. If and when the XRT climbs above this high back here at 91, I will add to my position, and of course by then my stop will be a trailing stop. So you may want to watch the XRT in the coming week. Now, also, you may also want to look at a couple of the holdings in the XRT. It really is an interesting ETF. One of them is, and I went through some of them, some of the individual stocks in it. The Upbound Group is symbol UP. Can't write very well with this. BD. If you can read that. The Upbound Group. Whoops. That is kind of an interesting chart. And the Revolve Group, RVLV, RVL. You might just want to look at those and see what you think. I thought they were interesting. Check it out. And now please know that at ToniTurner.com, we've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now is a great time to check out my timeless training programs. How to bottom fish like a pro, one of my favorites. How to bottom fish like a pro is the perfect training to check out right now. In it, I show you exactly how to detect with high probability how a stock or ETF is about to wake up from an extended downtrend and finally take off again. Our new low price for this program is only $199, and you'll receive special bonuses when you order, including 1 month of Metastock daily charts or Metastock real-time charts for free. So from our ever-popular 7 steps to successful trading, how to swing trade successfully, everybody loves this one. How to trade the trend to profits, one of my favorites. How to read charts, great for novices. 3 winning setups, really good for short-term traders. And these 2 are only $59 each. And how to bottom fish like a pro, which is we're talking about here. Find out how my online programs can help you earn more money quickly and easily. And once you purchase, you'll have unlimited access to learn at your own pace. So be sure to check them out by going to the link on this screen, or easier still, just click on the orange button below. Until next week, be careful out there. Keep green on your screen. I'm Toni Turner, and this is The Market Now.